In this video sequence, I am going to make the three major financial statements. In a previous video series, actually, I've journalized my transactions. I've done transactional analysis and journalized my transactions, and I've posted them to the general ledger, and then I've created from that a trial balance. Once my trial balances and I am confident that it is an accurate representation of what's in my general ledger, I don't need to worry about the general ledger and the general journal anymore. I'm done with those. I can just simply work from my trial balance. And a good number of problems begin with the trial balance, assuming that the general journal and the general ledger, the accounts go to the trial balance. That's where we are in the accounting cycle, in this process of doing our books. So here's my trial balance, and you can see there's a series of accounts. I've got cash, it's a debit. Accounts receivable, that's a debit as well. Then I've got my credit accounts as well. I've got landscaping fees, so on and so forth, and these should all be on the correct side, etc. In the process of creating the major financial statements, there's a clear set of steps involved. I'm going to first make the income statement, then I'm going to make the statement of owner's equity, and then I'm going to make the balance sheet. And it's important that you know these statements, the order that they go in, and also the formulas for them. And the formulas are actually very simple. All the income statement is revenues minus expenses equals net income, or if you have more expense than revenue, net loss. Maybe our business made money, or maybe it lost money, just depending how the business did for the year. So there's the income statement, and then there's the statement of owner's equity, which is the beginning capital, the capital I had at the beginning of the month, plus or minus additional investment. That's obviously going to be a plus, and the withdrawals is going to be a minus, and then plus or minus net income or net loss. What these two statements do together: first of all, the income statement tells whether your business is making money or losing money. And then the statement of owner's equity tells whether the investment in the business is growing or shrinking. Does the investment have more money than it had before, or does it have less? The net income and net loss is certainly a factor in that, but also withdrawals and additional investment are a factor in whether your investment is growing as well. And last but not least, the balance sheet drawn from the major accounting equation, the basic accounting equation: assets equals liabilities plus owner's equity, which in this case is, I'm simply going to take the ending capital and plug it to the balance sheet. And you'll notice that the order of these statements is important, because I begin with net income and net loss, and then I take this value and I put it on the statement of owner's equity. I'm moving it from here to here. So I can't really make a statement of owner's equity unless first I've made an income statement for the month. And the same thing happens with the balance sheet. I take the ending capital from the statement of owner's equity and I move it on down to the balance sheet. So again, I can't make a balance sheet unless I have a statement of owner's equity already created. So there's an overview of the process. And now I'm going to make the first financial statement, the income statement. Here's my trial balance. With my trial balance, I'm actually going to check off the items that I use, because all of these accounts are going to go on one of the three major financial statements, and we're only going to use each of them once. So let me go to the income statement. The first thing I need is a title, and it's Felicia's, but my program is quitting on me. Just a moment here. Bring that up again. Alright, so I think I'll type that out so it doesn't fail on me again. The first thing I need is the title of the income statement, which is the same as the one in the trial balance. This is the business account that I've been working on. And here's my trial balance. Felicia's Landscaping Services. Type up the title here. There's the trial balance. Where did the income statement go? There it is. Felicia's Landscaping Services. That's the name of the business. And then this last line of the heading here is going to be somewhat like this one here. It's May 30, but it's going to be for the month ended May 30. And the reason for this is because the income statement doesn't show what things are like on a certain date. The balance sheet shows exactly how many assets you have on a certain date, be May 30, and it shows where things are at that date. The income statement shows the expenses and the revenues for a given period, all of the income during this period and all of the expenses during this period. And then so I have to look and see what goes on the income statement. It's revenue minus expenses equals the net income and the net loss. And for this, it's also important that you have a sense of the formatting for how this works. First, I'm going to have revenue here, and then I'll indent a little bit. And I can look at my trial balance. I have exactly one revenue account. It is landscaping fees earned. Some businesses will have more than one revenue account. They'll want to see revenue for the money that we've earned from doing services, plus maybe we sell some stuff in our shop and we want to see that as a separate revenue account. But for now I've just got one landscaping fees earned. I'll go ahead and indent and put this on my income statement. $3,000. And next, I've got operating expenses. In more advanced income statements, there'll be other kinds of expenses besides operating expenses, but for now, this is all I have. And those are advertising expenses, the first one. And I want to make a point about these columns here. These columns are no longer debit and credit. On the trial balance, I've got debits here and credits here. On the three financial statements, this isn't debits and credits anymore. This is the total column, and this is the subtotal column. So I'm going to put this in the subtotal column because I'm going to add up all of my expenses and then put it in the other column. So there's the first one, advertising expense, and I believe that's all the expenses I have for this one. If I had another one here, I'd put it here. Most businesses and even most problems do. If I had some rent expense, I put it in this column and then I put the value here. But for now, I've just got advertising expense. So what I do is I total these up and I put the total in this column here, 150. Total operating expenses. I'm also going to indent this line here. Total operating expenses is $150. I'm also going to put a line here to show that I'm adding up these values. It'll be a thick line here. And then I'm going to put another line here and subtract the operating expenses from the revenues. And as you can see, there's more revenue than there is expense, so this is going to be a net income. On my calculator, $3,000 minus 150 is $28.50. That's the amount of net income I had for the month. And then I'm also going to put a double line here at the bottom. So notice the lines that I put on this form. There's a line here for the subtotal, then a line showing that I'm combining these two numbers, and then a double line here to show that this is the final answer. You might have heard the expression, the bottom line. This right here is the bottom line. And now I've finished creating my income statement. Up next is the statement of owner's equity.